Investors are still digesting that Bank of Canada interest rate cut, and we're just 3 weeks away from the next interest rate announcement. We also, of course, have worries that if America doesn't cut interest rates anytime soon, it's likely to put pressure on the Canadian dollar if we keep bringing down borrowing costs in this country, and it's not certain when the Fed will start to move. Our guest says he changed his bearish view on the loonie. Well, what would get him to change his bearish view on the loonie? Let's bring in Adam Button, Chief Currency Analyst at Forex Live. Thanks very much indeed for joining us. So, really appreciate it. So you see the pressure on the Canadian dollar over the next while?
Yeah, there's not a lot working for Canada right now. Canada is a country that's built really on housing and immigration, and those two legs of Canadian growth are in deep trouble at the moment and for the foreseeable future. Now, I think the best path forward in the short or medium term for Canada is to double down on low rates. The problem is that you'll see currency weakness coming out of that as soon as that decision is made. And if the Bank of Canada has the wisdom to see the cyclical slowdown that's hitting Canada and the rest of the world right now, they'll start cutting rates aggressively. Right now, the market's pricing about a 45% chance of a rate cut in July and about 50 basis points for the remainder of the year. If we were to up that to, say, 100 basis points and continue cutting from there, yes, the Canadian dollar would weaken in the short term, but in the second half of the decade, I think it would set up for at least some sort of sustainable economy and a rebound from there. So it's a matter of taking your medicine now and accepting some currency weakness and hoping for economic strength later in the decade.
But in the near term, you see a weakness in the Canadian dollar?
Well, there's not a lot working right now in the Canadian economy. I think we've seen enough numbers now to recognize that inflation isn't going to be a problem for long. There are plentiful low-wage job openings, workers right now. The wage pressure has disappeared. Housing is in trouble, and there's just not a lot of investment coming into Canada. And it's a time, too, when you talked about a lot of stocks that are weakening. There's a lot of cyclicals in there that are struggling, and that's the same the world over. So, it's not a good time to be investing in Canada or to be a Canadian company or to be invested in the Canadian dollar. So there's not much that the Bank of Canada can do about that other than to cut rates and set things up for a better time in the day ahead, in the months ahead. Now, that's what should happen. What probably will happen is they'll be late to cut rates and the economy will struggle and eventually end up cutting even deeper with the Canadian dollar weakening sort of further on the back half of next year.
The Japanese yen, there's the Canadian dollar, down about 3% versus the greenback in the past year. The Japanese yen near 38-year lows. Is there any prospect of recovery there?
Yeah, so they sacked their currency chief last week. He came out and he's been trying the verbal intervention. They also spent about $60 billion to prop up the currency. And he came out last week and he tried all his usual tricks, and the market basically shrugged it off and went to a new 38-year low. And I think at that point they said, we have to try something different. So they brought in someone new now, and he's going to try to establish some credibility. Now, I don't know how he's going to do that, whether it's some sort of sledgehammer with intervention. The foreign exchange market has seen a lot of different tactics. So I don't know if there's something in his bag of tricks that we haven't seen before. I don't think you can rule that out. But at the same time, the market's going to continue to buy dips in dollar yen or sell the yen on any kind of rally until we see sort of a reversal in the global trade, which I think is U.S. dollar weakness or a U.S. weak economy or some real recognition that the cyclical slowdown is here. I think that probably comes towards the end of the year. And that, for now, is just a matter of, do they want to buy some time or do they want to let the currency go even further? Because there's nothing that Japan can do, I think, to stop this freight train right now.
Let's turn to Britain. The Brits are set to have their election tomorrow. There's a widespread expectation that Labour will trounce the Tories, the governing Tories. Does that have much in the way of implications for the British pound?
Yeah, you look at the world right now, and I think the next trait on Britain is that it's somewhat of an island of stability. Yes, we're about to have a big change to Labour. I think they're going to outwin them something like 400 to 100 in seats in Parliament, the biggest gap in 200 years. That's been priced in now for months, even before the election was called. And you're moving to labor, but they're not promising anything in the way of corporate tax hikes or anything too business unfriendly. Yeah, they want to fix the health system. Everybody wants to fix the health system. It's sort of those domestic things on the edges that they're moving on. But we know what we have with labor. Now you turn to France. Wow, you've got a big political uncertainty there. Political uncertainty in the U.S., probably coming for Canada. England looks sort of relatively stable, so there could be some upside on that. Problem is, it's not a very dynamic economy, so I think the upside is fairly capped. But maybe on Monday we start to see, or even on Friday after the election, we start to see that edge up.
It's interesting. Rupert Murdoch's tabloid, The Sun, normally endorses the Conservatives, but they are calling for voters to go with Labour this time, talking about infighting, etc., in the Conservative Party. First time in more than a decade that they have backed Labour. You touched on France. Of course, France is part of the euro. Does the political turmoil in France have much implication? Have many implications for the euro?
Yeah, well, I think, in the short term, generally after an election, you see a sigh of relief. I think we tried to see that a little bit in French stocks this past Monday after the first round. I think we'll probably see it again in that, less so in the euro, but the same idea. But, now when you contrast those two, you see the problem, right? In England, now you have 4 years of a majority government, some level of stability. Mm-hmm. Well, it's going to be election after election in Europe right now because the winds of change are blowing. And it's really difficult to see how it unfolds in a way that's really coherent for the euro in the way that it's been. Now, there could be some upshots in there, but the likely scenario is that we have continued infighting, no coherent energy strategy, no coherent growth strategy or regulation strategy, and it just makes it very difficult to buy the euro. Maybe we see it get up above 110 as the U.S. slows down, but I'm a seller there.
You'd be a seller of the euro. Finally, obviously currency traders interested in inflation, deflation. You say AI will be a major deflationary force?
Well, I think it's obvious. We saw in the Fed minutes just out today, they hinted at that for the first time. And we saw Jensen Huang, the CEO of NVIDIA, say the next thing that AI is coming for is heavy industry. So manufacturing, mining. You're going to be able to run mines without people. Robotics is the next leg, and I think it's tremendously deflationary as workers are flushed out of the workforce. I mean, I think we're headed to something like 20% unemployment. And the idea that we're in some sort of new era of inflation because we have a little bit less globalization, I think is completely wrong-headed. And that we're in an opportunity right now to lock in some safe high yields. But that's not going to last for long once it's clear that there will be major job losses from AI. So that's the way I see it unfolding, and my confidence level, and that's very high.